I've operated in markets for 30 odd years, so I think I've probably made any and every possible mistake that you've made and that you can make, and I'm hoping to share some of my broader thoughts with you. Bonjour, Sawubona, good morning, goeiemôre. I think that's all my language skills, I'm afraid, at the start of the meeting. I would like to focus far more on the economy, PSG, and our outlook going forward. I'm going to talk a little bit about our firm, talk about global markets, because I don't think you can talk about the South African economy in isolation. Focus on South Africa, because I think that's the interest of this particular group, but I also want to talk a little bit about PSG and why we are here in Mauritius, why we're excited about the prospects for our businesses here in the local market. I am a director of PSG Group. I'll talk about that later and our intentions, as I said, here in Mauritius. But I'm also Chief Executive of PSG Konsult. This is the business that we've used to make initial investments in wealth management and in stockbroking here in Mauritius. The majority of our firm is owned by PSG Group, but a factor which all of our companies have got in common is that the management of the individual businesses are large stakeholders in the companies. We're all entrepreneurs. We all like to be invested and involved in our various businesses, and I think there's a core belief that management should share in the spoils and the successes of the individual businesses. This particular business is involved in wealth management, asset management, and the insurance business, and of course for a variety of reasons, Mauritius is a particularly suitable location for us to extend into. The only other two slides that I want to refer to very briefly, the first one is just to say, the core competitive advantage of this business is a very large distribution network in South Africa, 700 odd advisors in 200 offices, and now we are located in Namibia, but also here in Mauritius. And essentially the service that we provide to our end customers is a cradle-to-grave offering. I think the biggest problem nowadays in financial services is that the relationships which they hold with end customers tend to change monthly or perhaps yearly, but it's not uncommon in our business for our advisors to have relationships of longer than 15 years with the individual clients, and that's really what our competitive advantage is. Owners are managers in the business, and we believe in very, very long relationships in the businesses that we operate in. We also believe that good companies can't be a drag on society. We pay taxes, we're involved in the communities, we extend bursaries, and we generally try and be good citizens and operate in an uncombative style in any of the locations, either in South Africa, Namibia, or also here in Mauritius. The last slide that I said I wanted to just quickly talk on with regard to the company. I think if you look at all the PSG companies, we don't believe in scale necessarily. We believe in fast-growing businesses. And I think what you can see here, and it's not just true in this business, the compound growth rate in rand terms of revenue was 32%, share price 28%, and even in dollar terms over this period, this particular company has grown at 16% in dollar terms. But that's true for all of the various PSG companies. We think you need to focus and then drive those individual businesses in the context of the markets in which you operate. Let's talk about global markets. As I said, you can't look at the South African economy without reference to what's happening in the world. This is the US long bond rate, so the 10-year rate. And if you look at this rate, you'll see that, more or less from, the early 1980s, we've been in this tremendous secular bull market in long bonds. And we got to the extreme position that, in many markets around the world, Japan, Switzerland, Denmark, and so on, you actually have to pay a bank to put your money in there on the short side. A 30-year money in Japan, can you imagine that you have to pay a bank 30 years to put your money in the bank? It's something that in modern finance is really boggling the mind of, I think, financiers and academics about what that actually means. So we've had this tremendous run in rates, but of course the question is, where do we go from here? And we've seen that since the election of Donald Trump, rates have almost doubled from the bottom in the US, which is now approaching 2.6%. And the basic thinking is the world economy is going to start growing because of deregulation, because of some relief in taxes and so on. And the question is really by how far these rates are going to rise. It has all sorts of implications, also here in Mauritius, for capital intensive projects, anything that relates to debt. So I think it's quite an extreme position we find ourselves in, and very small moves here could cause radical disruption if you think about compounding of interest, particularly at the long end of the market. So I think this is the first thing that one has to be aware of. The second thing that one has to be aware of, this is just the South African market in rand terms. I'll show you what it looks like in dollar terms very shortly. But over the last number of years, 7 or 8 odd years, the central banks of the world have done something that is completely unprecedented, which is really this quantitative easing that has occurred. And it's not just the Federal Reserve, which has bought almost $3 trillion of government securities, but it's also the Bank of Japan and the ECB. So it's very straightforward. I mean, if banks are going to spend that much money buying up securities, it's hardly surprising that securities markets start to rise. And of course, if they stop buying, then you have to wonder what's going to happen. And I think the lull that you've seen in markets most recently foretells some anticipation of the stop of that quantitative easing. And again, I think allied to the very, very low rates that you have to be aware that as conditions stabilize, that could cause all sorts of complications. And then the last point, just to reference what happens in markets, is really to talk about volatility. Now, this is the enemy of entrepreneurs. This is the enemy of risk takers. If you have high volatility, it means you have uncertainty. It means it's very difficult to take decisions. And we've been through a period where volatility has been quite low. So this is the VIX index. A 10% move on the VIX index basically means that the average daily price move that you have in the market is roughly around 1% per day. Of course, in '87, the average price movements per day in markets were somewhere between 3 and 5%. I don't know if you remember that period in 2007, 2008, 2009. And if you have those kinds of price volatility, those price spikes, then of course it causes a downward mood in terms of confidence, and it has all sorts of implications. Now, what has happened latterly is in currency markets, the volatility started to pick up quite dramatically. So the average daily price moves in currencies, these are major currencies. I'm not talking about the smaller currencies like the rupee and the rand. I'm talking proper currencies like the dollar and and the pound and so on. These price moves are now almost 1% a day, which is very, very unusual if you think about it in terms of volatility rates. Bond rates have also started to become more volatile, and equities are lagging at the present moment, but of course if quantitative easing stops, which has underpinned the market, you have to ask what that's going to mean for volatility. So there's all sorts of things that you have to think about. What we try and do at PSG is, they say being wrong on your own is a very lonely place, but we take a contrary view. We think you have to be lonely. You don't make money if you go with the crowd. So that's why we look at these extreme events. We try and interpret them. We try and think what everybody else wants to do, and mostly we do the completely opposite. That's just how we think. That's how we make money at PSG. Let's talk a little bit about South Africa. So I said to you that the all-share index in South Africa is up almost 2.5 times from the bottom in 2007. This is in rand terms. But when you look at it in dollar terms, this is more or less what's happened to that very same index. So more or less from 2007, in dollar terms, the South African index has gone absolutely nowhere. This is not uncommon in emerging markets. I mean, by the way, this is I looked at some indices here in Mauritius too yesterday with my colleagues. In rupee terms, the market has not done very much, and it's a feature that you see everywhere. In fact, I mean, if you look at the actual dollar index, it's actually down on 2007. So it has all sorts of implications in terms of how you think about South Africa. And I think when people think about South Africa, particularly South Africans living in South Africa, they always think about South Africa in nominal terms. They always think about it in rand terms. But for international investors and for comparative purposes, you of course have to look at it in dollar terms. The single biggest reason why in dollar terms the market has done so poorly, and it's kind of an obvious point, if the market has more than doubled from the bottom in 2007, there can only be one reason why it's been flat over that period in dollar terms, and that's because the currency plummeted. And I mean, the plunge in the currency has been quite dramatic. You know, believe it or not, 2010, 6 to the dollar. You know, in some ways it's the good old days. It was very, you know, in the most recent past. But of course, what you can also see is that currency volatility in South Africa is not unusual. We had a similar effect in 2002. We had a similar effect in 87 and 1984. But the dramatic side of it is these movements, which are more or less 2 standard deviations from the mean. Now, of course, as I said, we at PSG try and take a contrary view. I remember standing in front of audiences in January of this year when all of them said, you know, South Africa is a disastrous situation, the rand is going to extend its losses, and you know, business is going to come to a grinding halt, and so on and so on. So people tend to look through the rear view and not through the front in terms of perspective. And of course, what has happened is that the currency has actually changed direction and actually appreciated quite remarkably during the course of this year, contrary to almost every prediction and every expectation of every market commentator. But nevertheless, when you think about South Africa and you think about the market, you can't stop thinking about the currency. And it's a discussion which we have with our clients, not just in the context of South Africa, but in relation to all markets. Currencies are vital. What underpins the currency? I mean, there are some positives and negatives. I'm not going to dwell on it. The bottom line is South Africa's got an extremely strong balance sheet. The debt to GDP ratios are fine. There's little offshore debt. Inflation is more or less under control. The institutions are good. And before I deal with negative, the credit downgrade, I think on the negative, I think the negatives are well known. You know, 5.5 million taxpayers, 17 million recipients. Social spending is a big issue. The interest rate component is an issue. The employment to welfare ratios are very high, particularly in the. So of course the shock that occurred in December was in relation to Nenegate. You know, we all know what happened there. But the question is whether that's positive or negative, and what does that foretell about what economic conditions would look like in South Africa. And I think in South Africa, when you talk about economics, you always have to talk about the political economy. You can't just talk about the pure numbers that underpin growth and so on. And I'll make some comments about that shortly. I think this has been you know, a remarkable fact that following the dramatic events and the blowout that you've seen in the currency to, you know, almost 3 standard deviations from the mean, that we managed to avert a credit downgrade in South Africa. I mean, I think it's remarkable that that was achieved, and it was achieved not through luck, but through society, the institutions all standing together to say that, you know, there's some very strong positives about South Africa, and if we can deal with the negatives, then good things can happen in South Africa, and we've managed to persuade the credit rating agencies of that. The only other comment I want to make in relation to the credit downgrade is it most definitely affects the poor. I think business can't stand away from the social conditions that face South Africa. But a troubling factor is that people don't seem to always believe that downgrades affect the poor. They think it benefits the rich. Of course, if you have a downgrade, the immediate thing that happens is your cost of debt goes up in an environment where we already know debt is relatively low. And that cost and that burden that implies for the man in the street is extremely severe, because their marginal expenditure, that buffer that they have by comparison to the rich, is much narrower. And so if you erode or you do anything to affect that buffer, the first people that get hit is the poor, not the rich. And I think this is one of the dramatic issues that we continuously discuss with government, and that we continuously try and persuade the broader society about in the context of South Africa. So what happened, I was part of the CEO initiative. All our PSG companies were there. I've met with the Minister of Finance on 2 or 3 occasions. We met with the President in the union buildings in Pretoria, and we had the following points which we said to government. We said, we believe in the NDP. This is the National Development Plan. We've got no issues with it. It's a fantastic plan, but we need to implement. Of course, this is not a problem that's unique to South Africa. This is a problem that exists around the world with governments. But in our case, we felt that you needed to implement that plan. We understood that we had to have some tax adjustments, that tax increases had to occur in South Africa. But it can't just be wealth related, because the pool isn't big enough. There has to be other taxes that have to be levied, particularly in relation to that, which is extremely politically unpalatable, particularly in the context of South Africa. So you have to understand that I sat in a meeting where one of the ministers, those of you who understand the South African lexicon, just said, when we raised that issue, he just said, I call now. But I think it's something that you have to address. And then in terms of the wage bill and wasting, I think that point was taken by government. The SOEs, I don't think we need to say much more. Public-private partnerships, privatization, which is very contentious, labour legislation, anti-corruption, and the business and the support of the Minister of Finance. These were the issues that were discussed. Lengthy conversations between business and government, all trying to improve South Africa and make it a destination for business. This you have to take account of. You've got the right, you've got the left in terms of the political spectrum. For business, there are some very concerning issues here, particularly in the context of the rating agencies. The land expropriation, the nationalization of bank and strategic assets. This is the agenda that's been put forward by the EFF, and I don't want to make a comment on whether I think it's right or wrong, but I think what we have to do is we have to pay attention to these in the context of a broader debate which is going on in South Africa. So what have we done as a PSG group of companies? As I said, we've actively participated with government. Our chairman was in a meeting, it's small print, this is with the president, where we said, we've got 20 chief executives in our businesses, we're prepared to assist government where we can, we're happy to work with government to develop and implement successful projects, we contribute to growth, skills and so on, we're happy to serve on the boards of the SOEs, and we don't want to be a drag on society, we'll participate in whatever government wants us to do. And I think that's the change that's occurred in South Africa over the course of the last 18 or so months. I think business is willing to not just pay lip service to support, but actually to contribute in terms of resources and skills to try and fix some of the more obvious issues that exist within South Africa. These are the growth statistics, inflation, the annual growth rate. I personally am very skeptical about what economists predict. It lags always what happens in the real world. But for those of you that know what some of the issues are that's in emerging markets, the obvious issue in terms of real GDP is that the developed world has for some time now been growing at a quicker rate than the emerging markets, and South Africa has been in that group. This ought not to happen because you should have population growth which contributes to growth, and if that doesn't happen, it means that those economies are somehow constrained. And I think that's our message to government. Our message to government is you should be growing quicker, we should be growing quicker. We need to remove these barriers to growth, these stumbling blocks, which is what I've mentioned earlier, and if we do that, we're going to grow quicker and we're going to go to a better place. I talked a little bit about the philosophy of the PSG group. You know, we try and keep things simple. We think if you complicate things, you get yourself into trouble. We always focus on growth. We don't believe in size. Size, sometimes we feel you get diseconomies of scale. We think you need to relentlessly focus. In our view, focus equals success. Barriers, I mean, this is something that we often debate, but I think the other obvious issues in terms of governance. Many people have criticized King, for example. We have no issues with that. You know, we feel that the companies need to be well governed. We need to get the right directors, and we need to set the right tone for the companies that we have. I said PSG Konsult is part of a portfolio of businesses. Capitec Bank is the fifth largest bank in South Africa with about a 2% market share. Kiro, the largest independent school provider in South Africa, again a 2% market share, very rapidly growing business. Our own business has got about a 3 to 4% market share, rapidly growing business, and then of course we've got Zeta, which is Pioneer Foods, agri-businesses that we also own in South Africa. We've got a large private equity portfolio, a BE partner, a corporate finance business, and then we have a general central corporate services business. The reason I put up this slide and the reason why I'm here is because in terms of Mauritius, what we've observed is that the companies that we interact with, particularly in Africa, are increasingly choosing Mauritius as a base to move from. And we have to pay attention. This is one of the issues which we've also conveyed to our own government in terms of the preferences of the counterparties that we deal with around the world. And you know, we feel that there's many benefits here in Mauritius. I mean, I think that some of those benefits that we like the fact that you've got recourse to the Lord Privy Council in the UK. We like the legislation here. There's countless taxation advantages. We like the quality of the people and the staff that you can hire here in Mauritius. We think the technology is relatively seamless. And we like the fact that the Mauritian government makes an effort to welcome us here in Mauritius. So I think it's not just for South African companies and the South African government that has to pay attention in relation to that, but I think all the African governments also have to pay attention to that in the African companies. So we are here for purely economic reasons, but also for the very profound benefits that we believe Mauritius brings. We've not just put structures here in Mauritius, because I think that's usually the first thing that people do when they think about Mauritius. We've actually bought businesses. My partners Vincent and Philippe are here. Matilda, I don't think she's here. We bought a wealth manager, we bought a stockbroker in South Africa, in Mauritius, and we've also announced that we intend to seek a secondary listing for our first company here in Mauritius, which will be PSG Konsult. So we're buying businesses, we're putting down assets, we're listing our companies here, and you know, we're very serious about what we want to do here in Mauritius. Here are some of the services that we already offer, which you may not be aware of. But again, it's against the backdrop that if I were to do this presentation in a year from now or 2 years from now, of course, depending on how comforting the Mauritian government remains, you know, I would expect that there'll be a broader range of services and there'll be more names of companies that we will put up. In conclusion, you know, what's our plans? We like to be positive when other people are negative. We just think things are never as good or as bad as you think, so we prefer to remain optimistic. We always feel if you get caught up in short-term decision making, you make mistakes. It forces you to rethink too many times what you do. You tend to over-engineer issues. And I think the last point is a generic point. We at PSG believe in partnership. We believe in working with people. We believe in getting advice, and we don't believe in doing things on our own. So I think with that, our decision to be here is underpinned, I think, by these broader points. So Richard, Peter, with that, I think I'd like to leave it. I try to take you on a kind of a quick whistle-stop tour, but I'm, obviously happy to discuss the South African economy and the markets. It's a very, very broad topic, so I'm very happy to discuss any of those issues.